One.
Sing along, kids.
Sammy! Is that the Sammy version?
Candyman is here. What's happening, buddy?
Summer trading, man. It's here. FOMC tomorrow. Everything's just kind of grinding higher. We were oversold, as you said before we came on. Now we've bounced nearly 40 points, so it's been a nice 3% rally.
Yep. You have your U.S. peso working hard for you. I think that's a big thing you need to pay attention to. We talked about that the other day.
Yeah.
I'm just telling you. I don't think the dollar's out of trouble, okay? And I think you need to pay attention to that. We live in a bailout world.
Right. We live in a bailout world. And again, to me, you got to watch that 73.40 level, 73.70 level. We're at 75. Yeah, we've sold off a little bit, but still, just stuck in the range. To me, it's 73.70, 76.50. The next move will be, $3 up or down outside of that range. So you just wait for that range.
Yeah, but let me ask you this: if the dollar went up $3 or whatever, is that what you're talking about? The dollar right now?
Yeah, I'm talking about just the straight DX.
Okay, would you continue to be long that, or would you sell that there? Because I'd sell the shit out of it.
I'd buy
it 80-ish.
I
ain't talking round whole numbers. I'd sell the shit out of it at Zero Sigma.
I think I'd buy down to 73.50, and I'd if we break out above 76.50,
okay,
I'd be selling.
So really, how bullish is it? That's the point I'm trying to get at.
Yeah,
I'm just talking. Nothing's going to change here.
Absolutely. Macro, you're absolutely right, but micro.
Yeah. So this is what I'll come back to, and I think we need to talk about is, so we live in this bailout world. We're going to bail. It would be bullish if Greece would default, but they're not gonna. But the problem is that they're going to get a little bit of moolah to buy them time until August, right? But more hands come out next time around.
Right.
And that's in the hands of Spain, blah, blah, blah. Now, I believe that the Irish are going to default. They're going to raise their middle finger to the bankers and say, we're not going to take 30 years of pain for you guys. That's what I think.
Well, I think the masses already are saying that. The people that live in both Ireland and Greece are already saying that with their street protesting. But they're not the ones that make the decision. So I agree with you. I mean, the people have already said, why are we kicking the can? And
because we need to, because we have to extend this.
Right.
There's no pretend. It's just extend to spread out the pain and, I get that.
Right.
But, when these people, I find it really ironic when the bulls come out of the woodwork on a day like today. We have a big update. We were oversold. It's not like we weren't expecting this, right?
Well,
but the bulls are out of the woodwork, and they're telling you how bullish this is, but yet they're not giving you any targets, or the ones that do always give you these big, round, whole retail numbered targets. And as soon as I hear a retail 1,300, I immediately ignore it because I know they're full of shit.
Right. Totally.
So,
the candy man taketh and he giveth, and right now he's...
Yeah, I mean, I get, but the bullish thesis, let's just kind of review this. The bullish thesis is that it's good that our dollar's going down because we're going to export our stuff, right? I get that, right? But the fact is that we're not creating jobs, and we will not create jobs with that type of U.S. peso policy. It's not going to happen.
No, it won't happen.
Entitlements are rampant right now, and they're not going to go away. Hey, I like it because I indirectly benefit from that because of my better half.
Yeah.
I mean, but it's not the right thing.
It's not the right thing. But but if you can, but most people, again, it all comes down to, when is the pain going to get taken? Do you want to take it now, or do you want to take it when it's more painful? And obviously,
let's think about this. So our national average for gasoline is $3.66 today, right? So it's down quite a lot from the highs. We had a climax high in the average price of unleaded.
Right.
But I'll tell you right now, if I was trading the unleaded, what we pay at the pump chart, I'd buy the shit out of it at 304-ish.
Yeah. Well.
Yeah.
And we're trading 3.
But you need to think about this. So your dollar is worth less right now. So even at $3.66 gasoline, as we are buying it nationally right here today, in real terms, I'm just guessing, it's around $4.25.
Absolutely.
That the average person is paying for this.
Yes.
And so they're paying all this to go to work or to do their errands, run their kids around. Now, the simple fact is that, I go over this with my wife or people that I interact with on a business nature, is that like the 4th of July weekend, the Memorial Day weekend, those vacations are planned. They're going to happen. They're going to occur.
Sure.
But that's why I have been saying we're going to have abnormally high prices this summer for commodities because of these weekend fiascos. Anyway.
Well, and here's also what happens, Carl. The vacations are planned because last year people didn't plan them from the year. It's the backward looking. So the year before, here's how the retail, they buy at the top and they sell at the bottom. And here's why. Because their memory is last summer gas wasn't that expensive, but nobody traveled. So then they said in the off season this year I'm going to travel, and now, as you said, they're going to continue and follow through.
It's come down so they feel like it's cheaper, right? No, but I get that.
Yeah, but it's not. It's more expensive than it was.
You're actually paying 30 cents more than at the end of November, or I'm not 30 cents, 30% more,
yeah.
And that's not because of where the dollar is when you figure that into the equation.
No. We're just talking. We're talking absolute prices. I agree. And that's my point is the plans that people are following through and executing for summer were planned last fall, and and so you're absolutely right. So looking forward, truly as a trader needs to look forward. You're going to have people going, geez, that really crushed me last summer taking that trip, and
I blew my wad.
In 2011, I blew my wad taking the family on a 800-mile trip.
Oh, shit, I shouldn't have done that. But, okay, so let's talk about something else. Here's something else I alerted to you this yesterday is that, so I've heard, hasn't happened to me or us, but the Banker of America started cutting HELOCs big time.
Yeah.
Okay, so
I sent you that article yesterday talking about how...
We'll get to that. We'll get to that one. Hang on. I'm not done yet.
Okay.
But this HELOC thing, sure, you can spin that positively because you're controlling the consumer getting out of control in a way. But guess what? The consumer needs some moolah.
Right.
Yeah.
Yeah.
The average Joe is not getting the free moolah.
Right. He's not.
They're the ones that need the free moolah.
Yep.
Right? And so then you sent me this article last night about Obama. He's going to help out the housing market again. How about that?
What's that? The 17th time?
Well, I can't. I don't have that many fingers on my hands, so I can't count that high.
or toes.
What's that?
Or toes. You don't have enough toes either.
Yeah, no, I guess. Maybe I've run out. So, but
yeah. Well,
another point I want to make, though, is that so we have housing prices that are continuing to erode, right? Because we have government interference in the market, and it just slows and it extends and potentially makes it worse and drag out longer.
Mm-hmm.
So we have housing prices that are coming down, which that's real, tangible net worth of people that's coming down. But we have commodities that are staying I wouldn't say artificially, but abnormally high. That makes the core inflation rate higher, right?
Yep.
Right? Nobody's talking about that.
Right.
So this gets me to the point that right here, the people that have this thesis that QE3 is underweight, and it's going to happen now, or it is happening. I don't see it. That would be a very bad thing if that was to be indeed the case, but it's not going to happen for those reasons. Not here right now. It will happen. I truly believe it will happen.
Yeah. But it's got to be, again, it's back to our original thesis, which is we have to see a 10 to 20% pullback in all asset classes before QE3 will be allowed to happen. You got to have a little bit of pain and a little bit of shock and awe. But again, that might be 1120 to 1160, somewhere in there. So
sure,
we'll continue to watch that, Carl. And again, more food for thought here. I think it's a good conversation, and we'll be back again tomorrow.
All right, man. Have a good day.
You too.